Let's stick with the Mag 7 category, but shift to Apple. Tony Zhang joins us to talk some trading. He's the chief strategist at Options Play. Tony, thanks for being here this morning. Thanks for hanging on while we went through that last trade. So we got the bullish Tesla trade in. You got a bearish Apple trade, so we got something for everyone here. Take me through it.
We're currently in an environment where Apple simply just continues to face multiple headwinds right now. I mean, we really have to start off with the fact that iPhone 16 sales overall have been somewhat underwhelming. Every single data point that we seem to get every single month with regards to iPhone 16 sales continue to kind of show a slowdown in terms of the upgrade cycle for the iPhone, which is meant to be the primary driver of revenue for Apple. And, more importantly, I think the fact that Apple has essentially staked their entire future in augmented reality. At the moment, they are not a leader in that particular space in either the software or the hardware side of things. So I think from that perspective, we're really talking about, current concerns around the product cycle that is concerning, and then the future that looks quite uncertain. And then you put into the fact that they've really fumbled the launch of augmented reality or I'm sorry, of AI for Apple. This is meant to be the primary driver of the next upgrade cycle for the iPhone 16. And now it's looking like it's not even going to be potentially be a driver of sales for the iPhone 17. So, when you're in an environment where there's clearly a slowdown in consumer demand, you look at the macro environment where consumer sentiment is at multi-year lows. We're seeing a meaningful slowdown in actual consumer spending that we've been talking about the risks of for the past couple of years. This is really the first time we've seen a meaningful decline in consumer spending in broad categories. I think when you have shares trading near a major resistance level around this 220, 225 level, and it's trading at a pretty significant premium from a valuation perspective relative to the market, the timing simply just favors adding some bearish exposure here. Trading at 30 times forward earnings, it's hard to wrap your hands around those types of valuations when growth is not expected to be any faster than the average S&P 500 stock. And net margins of 24% is great, but it's not enough to justify that 50% premium in terms of valuations relative to the S&P 500. So I think right now,
every time somebody says Nvidia is too expensive, I'm like, why are we not talking about Apple? Apple's way more expensive.
Exactly, and it doesn't have the growth trajectory of Nvidia. It's half as profitable as Nvidia. So for those reasons, I think Nvidia actually represents far better value and Apple actually represents one of the most overvalued stocks within the Mag 7. So that's why I think it makes sense from a timing perspective to actually take a look at some bearish exposure here for Apple.
Okay, how do you want to do it? You want to buy downside?
Yeah, I think right now, we see, with the VIX trading around that 18 and a half level, it really speaks to, I feel like markets are actually underpricing some of the downside risks that we're seeing here in the market. So I actually think right now it makes a lot of sense to be buying convexity, buying options. So I'm going out to the May expiration. I'm looking at buying the 220, 200 put vertical here. Earlier today, you can spend a little over $5.25 for that debit spread, which will give you just nearly a 3-to-1 risk to reward ratio of Apple's below my $200 price target here by that May expiration. And that's the type of risk to reward ratio that I like in this type of market environment where it seems like implied volatility has come down quite a bit here over the last couple of weeks. And we want to take advantage of that as option buyers if you feel that the rally here is actually an opportunity to start adding some bearish exposure.
Okay. So the vertical, and you're doing it out to May. So you're giving yourself a little bit of time here. And I guess that also kind of reflects, a couple different possible market outcomes. Because if you're like, when we're talking to Tesla, like you're trading Tesla right now, you're trading beta to the market basically. Whereas Apple has not traded like that. Apple has done unique things in different environments. It was kind of a safety trade for a little bit on the way down. And then there was like 2 days where it just crashed.
Yeah, it's exactly right. It's a little bit of a different, certainly very different beast from Tesla here. But I think that at the moment, the investors are still being a little cautious right now in terms of their take on the slowdown with consumer spending, and I think they're still seeing Apple as a bit of a safety play here. But I think that's really starting to crumble a little bit. We've seen the multiple on Apple come in a little bit, and I think it needs to come in a little bit more.
I've not understood the Apple as a safety trade in the world where they are more expensive than Nvidia. So I'm with you on that. Thanks, Tony. All right, a rational trade as well. Thank you, sir. Appreciate that.